All right. Fresh week, new week. Let's go ahead and hop straight into it. So, came to the market right at 7, or more like 7:05, 7:10. And we see that structure from last week has held up overnight. Um, Price has impulsed on the 3 hour, retested, gave a push to the upside, but rejected off this 1 hour and is now pushing down. So, because it gave our first test here, I already know, hey, if I'm want to get in, I want to see it test lower. So I'm just pulling down to this last body. This last body is fine. And then from there, now I understand that I'm looking. So price impulse to the upside, retrace to the downside, and try to continuate, reject it off of 1 hour. So now I'm going to go to the 1 hour, see how that structure is holding up. We're not looking for new 1 hour because the 1 hour that was there when we last were at the market is still holding up. That's why I leave my higher time frames there. For the most part, I always clear out everything except the 1 hour and 3 hour. That way, when I come back to the market, I see how those high time frames have acted, what structure was broken, how it was broken, and then I dig deeper into the lower time frames from there. So looking here, we see on this retracement that price pushed down, it gave an impulse to the downside on the 1 hour, and it's retraced back to the supply area, gave a push off, pushed back a little bit more, and is looking to continuate to the downside. Will it continuate and break the low? We don't know, but we see that's the way price is heading. So similar to the 3 hour, because we see it got a good test and push off of here, we're going to go ahead and drag this zone up, because if I'm going to get in off of this zone again, I need it to test deeper in. And this is the last, because my last zone was all the way to here. This is the last candle with a nice gap in it that I could see price pushing to. So now that we got that covered, let's focus on where we're looking. So we're looking on this push to the downside, which could potentially be our continuation. So we want to focus on this leg on our 10 minute. So on the 10 minute, we want to just see where was the last low that was broken. So price push, push, push. And this was a pullback right here. Now it might be tough for you to see, but the reason I know it's a pullback is because at this low, price never wigged below. Price immediately opened and pushed up. So it looks like it's close call, but once you understand market structure a little bit better, you'll realize like, okay, it's close, but this is clearly a pullback right here. So as of right now, we have a 10-minute pullback. Let me give a couple candles. All right, we have a 10-minute pullback right here, and then a push to the downside. All right, so on the 10-minute, we have an impulse where this low was broken, and we are in a retracement currently. So now what I want to do is go to the 5-minute, focusing on this retracement area. So when I go to the 5-minute, is there any structure that's broken to the upside? Well, yes. There's a high right here that was broken. Price pulled back and broke it, but it was low probability. So because it's low probability, we're not identifying any zones. We're just identifying the high and low of it. And then we're going to identify the market structure so that we can go down to the next time frame. So on the 5-minute, we see we have an impulse to the upside and a retracement to the downside. So on the 2-minute, we want to focus on this retracement to see if there's any high probability structure there as well. So on the 2-minute, is there any lows that were last broken? Yes, right here. So price had a low here. It was broken, but low probability break. So that means the 2-minute low is now down here, which at this point, price is more likely to break 5-minute, which once it breaks 5-minute, I have to then go to the 5-minute structure and wait to see if it closes, than it is to give me some type of clean 2-minute. So I'm going to go to the 5-minute and watch it, and I'm just going to leave this 2-minute identified just in the event that it does become useful a little bit later. So what I want to do now is just be patient. Let's go through structure, see what it does. I see the 2-minute got broken. Let me see if it closed. It didn't. So now we just go back to the 5 minute. And then we got a 5 minute break and close past. So let's see if price, so we can get rid of this 2 minute because now that the 5 minute structure is broken, we have to reevaluate the 2 minute altogether. Only way we would have left the 2 minute is if it gave us a high probability zone. But because it was low probability, now we're just going to reevaluate it altogether. All right, so we got one candle. Let's see if we get a second candle push. Nope, we don't. This is a retracement. So price high here, and then it moved to the downside. So we just moved the low here. This is low probability. Impulse to the downside, and now it started a retracement. So we want to focus on the 2 minute for retracement. So on the 2 minute, no high has been broken to give us any retracement. So next, we want to find the last structure that was broken. So we go up, go up, go up. No structure broken to the downside. Boom. Price had this low right here solidified. Price broke it, giving a 1 candle push, 2 candle push, and then close down here. So we actually have a high probability 2-minute demand from this low that was last broken. And then what we want to do is go ahead and make sure it measures up at least 50%. Or see if there's any clean area. So 50% would be to about right here. But for me, I'm going to go with this clean area right here. I'm just going to pull it a little higher just because it gives 2 clean candles to the upside before the push and break. So now that I have this here, now we can wait on the 2-minute and see if we get any type of test. Boom. We don't. Price breaks past. Let's go on the 5-minute now. So it broke past, but it didn't close. So now we still have an opportunity with this 2-minute if price can retrace to it. So we're going to go back to the 2-minute and identify the new 2-minute structure, which is low probability. But because we understand it didn't close on the 5-minute, this 2-minute structure, we're still following 2-minute structure, and this 2-minute open zone is still valuable. So let's see, we can watch from the 5-minute. Boom. Boom. Then we got a 5-minute close. So we get rid of the low probability, but we leave the high probability 2-minute open zone because it can still be a factor in the future based off market structure. So we're going to leave the zone, but we're going to get rid of the low probability zone and follow price now. So price broke here. Do we get a second candle push? Yes, we do. Let's see how far price goes down before retracing. So price pushed pretty far. So we're going to go ahead and draw our zone from here up to here where it retraced. So this is our 5-minute zone. And we're going to leave this 2-minute for right now, just because it can still, price can wick but past here and then get off this 2-minute zone. But we also see the 10-minute broke too. So now we want to go to the 10-minute and check. So on the 10-minute, price gave a 1, wick, then gave a second candle push. So now we're going to get rid of the 2-minute. Now the only reason we're going to get rid of the 2-minute here is because the 10-minute encapsulates it. So we don't want to have 3 different zones in one. It makes sense to have the 10-minute and 5-minute together. It may make sense to even have 5-minute and 2-minute, but to have 10-minute, 5-minute, and 2-minute, that's just doing too much, overdoing it, overthinking it. We want to stick with what we know, right? So we get rid of that 2-minute. We're just following the 5-minute and the 10-minute. So let's see on the 5-minute, where does this price retrace? Boom. Nope. Boom. Perfect. So the first retrace is here on the 5-minute. Let's go to 10-minute. First retrace is there on the 10-minute as well. So now I know I have downtrending 5-minute and downtrending 10-minute structure. But price is reacting and rejecting off of a high probability 3-hour. I know that price, so that's one confluence. Price is due for a pullback because it just started its retrace. That's a second confluence. So I'm going to go to the 2-minute and look for uptrending structure. And the only reason I'm doing it, even though it's technically counter trend is because of the confluences I have for that. That price is testing in a high probability zone, in a high time frame high probability zone, and it's due for a pullback. So I can easily see a push coming to play right here. So we're going to go to the 2 minute, focus on this retrace. Is there any highs broken? Yep. So this high was broken and it's high probability. It gave a one candle push and then closed past it. So we're going to go ahead and mark off the zone. It's 2 minute high probability. All right, so now we need to see, where does price begin to retrace? So price begins to retrace all the way up here. So we could just check to make sure it's 50%, which it is. And this is our 2 minute high. So let's see if we get a retest. Boom, close, but not an actual test. And then it breaks structure. And let's see how high. So it breaks structure pretty high. Now, because we not focused on this 2 minute anymore. We was only focused on 2 minute for this initial push. We understood that this was counter trend. So because it didn't give it to us and broke structure, and now it's testing our high probability 5 and 10 minute zones, we're just going to get rid of all of this 2 minute area. We can leave the open zone here just because price may react to it at some point. But for the most part, now we are only focused on what's going on here. So first we want to look at the 5 minute, because the 5 minute zone is what's being tested first. So let's see if we get a rejection. No rejection. And we got a break and close past it. So now that we're getting rid of the 5 minute structure, and we know 5 minute structure is uptrending, guess what we're going to do? We're going to remove the 2 minute and we're going to go back to the 10 minute and reevaluate the 5 minute altogether. So first we can make this, we can get rid of this 5 minute low, as the 5 minute and 10 minute are the same. And put this there. Right? So the same way we do it as always. What did the 10 minute do? The 10 minute impulsed and is now in a retracement phase. So we want to focus on this retracement phase on the 5 minute. Let's go up to here. Where was the last high broken on the 5 minute? The high was here, pulled back, broke high probability. So now we have a 5 minute zone there. And that's the thing. When structure is broken on a time frame, reevaluate the higher time frame, especially if structure has been broken on both of them. That 5 minute was holding while price was pushing down, and it wasn't until it was broken that we said, okay, we can follow the structure all the way, or we could just reevaluate from the top, because the 10 minute did change as well. So now we have this 5 minute low here, and price is reacting off the 10 minute. So we want to go to the 10 minute, because if we get a 10 minute bearish candle, we're looking to enter into a trade. So look, we have a bearish confirmation candle here on the 10 minute. We want to look to enter a couple pips below, right? Stop loss was about 7.5 on this trade. So this is my first trade. That means we're looking for 17.5. All right. So let's see what happens. Boom. We are entered into this trade. So now the first thing I want to do is go ahead and start to find ways to manage this trade. So on the 5 minute, this was the 5 minute high, right? So I already know there's no 5 minute structure for me to manage this trade with. So guess what I'm gonna do? I'm going straight down to the 2 minute, and I'm focusing on this down push that I want. So what do I see? I see price push to the downside, right? It's a low here. Price pull back. Which is, nope, that is wrong. 2 minute. 2 minute, and then it broke this low down here. So it's low probability structure. Now, because we're managing the trade, now we can go a little further to see if there's a high probability 1 minute. So let's go to the 1 minute. So on the 1 minute, I see that 1 minute did have a high here and was pushing to the downside, but then it broke. But when it broke, it created low probability to the upside. And now it's pushing down. So because the 1 minute has already been broken, if this 2 minute is broken close pass, I'm going to exit. Remember, my rule is 2 low probability breaks equal 1 high probability break. So if price breaks and closes past this line, it wicked past it. But if it breaks and closes past it, I'm exiting for early exit. So let's see what ends up happening, and we're just gonna manage it from the time frame we're on. Price push. It wicked down here, but never broke. And then it pushed above and closed above. So we exited this for early exit. That was our first trade of the day. So we go ahead and exit here. We get rid of these. We go to the 5 minute, evaluate 5 minute. 5 minute high has not been broken yet. So the 5 minute is still in the retracement phase. And now we're just looking at the 10 minute. Because the only reason we would be entering now is with 10 minute structure. So let's go ahead here. So on the 10 minute, we've seen this break first. But on the 5 minute, we see, okay, price broke above here. Let's get one more candle. So it broke above here and created more low probability structure. So now we want to identify this high and this low. 10 minute. Nope, 5 minute. My bad. So here we had two options. My first thing that I did was I understood that if price pushed down like this on the 5 minute, that means that the 10 minute is very well probably very close to giving me another confirmation. But I want to see if there's a better entry somewhere else. So I went to the 2 minute, focus on this downside push. There's no lows that were broken. So now I'm looking for the last structure that was broken. Well, we had a high here. It pulled back and created a low here. It didn't break on this one. Let's get one more. It broke on the second one. Let's see if it's high probability. It's not high probability. So I would rather just take my chance on the 10 minute confirmation because the 2 minute would have to break high probability and then pull back all the way again just for me to get a confirmation versus the 10 minute just needs to print a bearish candle. And I know it's already close to being the end of the 10 minute. So we got a bearish candle here. So right below here, looking to get in for an entry, 0.5. And that would be about 27.5. Right? So now we got a bearish confirmation. Let's see if we get entered. Boom. So we didn't get entered right here, but price produced a whole nother bearish confirmation. So we can leave this because we still want to protect ourselves by having our stop loss above the high. And we have a confirmation right around the same area. So we're just going to leave it and see if the next candle pushes us in since it produced a second bearish candle. Boom. The second candle does push us in and it breaks this 5 minute low. So let's go to the 5 minutes to see where we can manage price. Right. So on the 5 minute, we see that price broke here. It wicked below. Let's see if we get a high probability. Boom. Now we have high probability 5 minute structure. So I can get rid of that and I can draw this zone. Well, really, we can reevaluate price. So let me go back. So on the 10 minute, we see prices pushing in our direction. So we want to focus on this impulse on the 5 minute without looking at what old 5 minute structure was, right? So getting rid of our idea of what 5 minute structure already was, where was the last break of a low on the 5 minute? It was right here. There was a low here, price pulled back and then pushed, gave a second candle push. So even though actual 5 minute structure may have called for a bigger zone, remember, I'm just focusing on the impulse in the direction that I am trading in. And I'm giving myself opportunities. At the end of the day, I'm trying to protect my capital. That is goal number one. I'm not scared to lose capital. I'm not scared to take trades. But once I'm in a trade, I want to eliminate the ability to take a full loss as quickly as I can. Now, if there's no way possible for me to do that at the moment, then that's okay. But you got to think of it this way. If you can eliminate the full loss from your trading and all you had was small losses here, small wins here, and then regular wins, your account would grow so much faster because even when you lose, you're not losing the full amount. So you're basically losing a little bit, making a little bit, losing a little bit. Oh, now you got a full win, and that just sets your account further apart versus I win one, win two, and then I lose three in a row. And it's like I took full losses. So now everything I did to get my account to grow was almost for nothing because it got taken out in a matter of two or three trades when you can just manage price, not so much focus on structure once you're in a trade, but focus on the highs and lows price is producing in your direction and against your direction while you're in that trade and manage it that way. So at this point for me, I identified this as my 5 minute zone. So at this point, there are two ways that I'm looking to exit. At this point, when I seen this, I knew it was two ways I was looking to exit. I'm either looking to exit if price rejects off of here, giving a bearish, bullish confirmation, or if price breaks above here and doesn't reject off of here. So if it just pulls back past here, then I'm exiting. If it rejects off here first, then I'll exit there first. This would be for a small loss. This would be for a little tiny bit of profit. So this was my second trade of the day. Let's see what happens. Price keeps pushing. Boom. And price finally starts a retracement here and gives us that bearish, bullish confirmation. Boom. 5 minute. So for me, what I initially did was I put a line right here. This was going to serve as my stop loss line. And then I waited for a candle. And then I was like, let me go to the 2 minute really quick. Because at the end of the day, getting out right here, it made sense. But at the same time, price was due for a pullback. So I was stuck between two things. I said, either I can get out at this line or let me see what the 2 minute has to offer. And then I looked on the 2 minute and I seen that there was 2 minute structure right here where there was a pullback and a break. It was low probability, but it's so close to the line that I said, you know what? I'm going to hold this trade right here. And if the 2 minute breaks and closes past, then I'm going to exit. And the reason I did that is because, like I said, on the 5 minute, price is due for a pullback. Price is due for a pullback. So for me to exit on the pullback that price is already due to have, like I could be potentially exiting a trade very early that I shouldn't be. So what I'll do is say, hey, price is due for a pullback on the 5 minute, but if it breaks this 2 minute structure and doesn't reject it, then I'm going to look to exit. So that was just to give myself a little bit of an extra chance, just in case price wanted to reject this 2 minute, which was right there by the confirmation, and push off of it. So let's see what happened. Price broke and closed above it right here on the very next candle. So I exited here for a small, it wasn't really a small profit because after fees and stuff, I really lost maybe like $10. So I just called that an early loss as well. But these were my two trades for the day. So price, the first trade we took was up here. Price kind of gave us a fake out, but we were able to exit early. And then we got back into the downside and price rejected off of this 5 minute zone and broke the high to the upside. So I was able to exit for two early exits, no full losses. So I didn't lose as much capital as I potentially could have, which means I saved capital to go towards trades that I may take later in this week. So that's the benefit of being able to cut your losses early, is that capital that you potentially could have lost, had you held through the full loser, you now have that extra capital to go towards trades for tomorrow or the next day or whenever you see another opportunity this week. So let me leave replay mode just to see what price has done so far. So look at this. So we exited early right here. And if we hadn't exited early, guess what? We would have took a full loss just like here. We exited early because of that. And if we hadn't, we would have took two full losses today versus just taking two early losses. So that's the benefit of following your plan, having your trading plan there and following it. Now I had this one here. I definitely knew this was a trade that I wanted to take. But again, I'm not going to pick and choose out of my high probability setups which one I think is going to work and which one I don't. Because the truth is you never know. You feel me? Like once I set this one here, I was like, okay, if price pushes to there too fast, I want to get in. But both of the setups I took were high probability. You got to look. This first 10-minute entry was high probability. The second 10-minute entry was high probability. Now, this is a third entry, but I only take two trades in a day. This was high probability 5 minute structure. And this one would have ended up giving me the best win for the day. But you know, sometimes that just happens. If I say I only take two trades a day and the third high probability opportunity hits, so the F what? Like, that's just part of the game. But you got to follow your plan. You can't break your rules just because you got a feeling. Because the same way this reacted and pushed, it could have not done that. It could have reacted and fell down, or it could have never reacted and pushed straight through. So me trying to assume like, oh, I knew this one was going to hold. No, I didn't. I had a strong feeling it might, but I also had a strong feeling that price might push off of this and push through because at this point on the 3 hour has been tested multiple times and it has rejected a high up here. So what you think going to happen doesn't really matter too much in the market. It's about what is happening, what's high probability. Let me take this high probability setup, and whatever the result of that is, I'll live with it. So today was a good day in the market. We showed up. We took two really good trades. We managed them very, very well. We didn't take any full losses. Again, for me, there's only four potential outcomes when I take a trade. Either I take a normal loss, which is aka a full loss. And for me, I want that to rarely ever happen. I want to rarely ever take a full loss. Not because losses aren't going to happen. I understand losses are going to happen. But I want to manage my trade so well that when I take a loss, I'm able to take my losses early versus letting them get all the way to my stop loss. My stop loss is there as a safe haven to protect me in case I'm not paying attention or in case there is no structure for me to protect myself. But I would really like to take my losses before price ever gets to my stop loss if there's an opportunity presented. Um, so normal loss is one, and that's the one that I want to rarely ever occur. And then I have early exit positives and early exit negative. Early exit negative is basically what we've seen today, where I'm managing my trade. Structure presents me an opportunity to exit a trade early in drawdown. Early exit positive, price gives me an opportunity to exit early in profit. And then I have my normal win. Those are the main four. Now, the fifth one is the big win, which is those times where like your TP is hit and you just got that feeling or you want to hold. I don't really care too much. That one's going to be a rare one too because I'm not in the market to be greedy. You feel me? I'm looking for the 1 to 2. When I get my 1 to 2, unless price is coming with a whole lot of momentum, I'm not going to hold. More times than not, I'm going to take my profit and move on to the next opportunity or get out the market completely. But the first four are the main ones. The normal loss, which I want to rarely happen. The early exit positive and negatives, which I'm okay with having a lot of those because I'm still saving capital on those, and then the normal win, which is just me hitting my 1 to 2. If I can have very, very rarely normal losses, but then most of my trades are between early exit, positive, negative, and normal wins, my account is going to grow a lot faster than if I'm having a bunch of normal losses, a bunch of regular wins, and barely any early exits. And that's kind of the idea behind it. If you can manage your trades in a way that eliminates the full loss, even though you're still going to have your stop loss at it as a safe haven. Like worst case, I take this full loss, but I want to manage my trade in a way to where that rarely happens. Then you'll start to see your account grow faster because now when you take those wins, you're not losing it so quickly. You know, you get that win and then your drawdown is a lot smaller because you're cutting those losses earlier versus you get those wins and then you're taking full loss after full loss after full loss. And you basically lost everything you were able to work for by getting that win. Like at the end of the day, every trade you take is work. Um, you got to put in work to get that win. You got to put in work to get that loss. You got to put in work to cut your losses early. And anybody who's been trading for a while and is not profitable, you know that to be true. It's not as easy as I think this is going to happen. I take this trade and voila, I'm making money every time. Like, no, you can make money here and there doing that, but consistent money comes from a consistent trading plan. It comes from disconnecting from the numbers, disconnecting from your emotions, disconnected from what you think is going to happen in the market, and you saying, okay, I have this plan. This plan gives me high probability trades, and when I manage it this way, regardless of the outcome, my account is going to grow. and you follow it to a T. You don't break your rules for any reason or just because you think this or that. No, you follow it to a T strictly over and over and over. So we're gonna show up tomorrow, see what happens tomorrow. Today was a pretty good day. But I'll catch y'all tomorrow.